in relation to account balance for synthetic index. So I hope with the little that I've said, I've helped you there. Okay, then there's someone who asked me, how do you know that a pullback is ending or starting? Right, a very good question there. What is a pullback? You know, the way that the market moves is the market moves this way. The market moves up, down, but overall, this is going up. The market moves up, down, but overall, this is going down. Now, a pullback is this area here, whereby the market breathes or is about to breathe. It's taking a break in the buy so that it collects more buyers and then it continues with the trend. Right, we can't have a straight line like this. We can't have a straight line like this. But as you go up, we need to go up, then we pull back, up, pull back, up, pull back. Or you can say this is an impulse correction, impulse correction, impulse correction, impulse correction. Right. So the best way to know that a pullback is starting or ending, when a pullback is starting, we have what you call highs and we have what you call lows, right? The best way that you can spot highs or lows, which make these pullbacks, is through candlestick patterns, right? When you are starting forex trading, I know most of you have read Baby Pips, you have read the Candlestick Bible, you've read how to trade with candlesticks, you just have read on how to start up as a trader, right? We have what you call evening star patterns, right? We have evening star patterns. We have what you call engulfing candles, right? Of that nature, right? When you see this in an uptrend, these are indication signs that the pullback is about to take place or a small time reversal is about to take place. The simplest way is noticing a pattern that looks like this. This is almost everywhere, guys, whereby the middle candlestick is the highest, the candlestick before that is the lowest, and the candlestick after that is the lowest. Let's take it a little deep. This then means that this is a high, this is a break of structure here. Okay, this is for those who are more advanced, those who know about break of structural points. But for those who don't know about that, you can just work with this candlestick pattern, right? This tells you that I've been going up, but now I'm reversing a bit. And what do I expect to see when that reversal or when that pullback ends? I'm expecting to see another pattern that looks like this, but in the opposite direction, maybe something like this, right? Maybe something like this. And then this tells you that the trend is about to continue going up. Okay. Now, speaking on that fact, I think I have answered you there. How to spot valid order blocks? Actually, I don't trade using these, so I'm sorry about that. I won't be of much help when it comes to order blocks. I don't even talk about order blocks, even in my trading. It's something that I'm willing to learn as I increase my knowledge in the forex market. So There's another question that says, guys, how do I know I don't know how to use the system or robot. That's a completely different topic. This is not the class for the robot or the class for the system. Okay, there's someone who said your basic trading strategies, please, then maybe we can have some questions. But the way that I trade is I use price action generally. Besides using the system, besides using the bot, I'm a price action trader, but I trade candlesticks. That's why that you even find most of the times when I enter the market, I find entries at any given point in time because I trade candlestick formation. You know, the importance of knowing candlestick formation is even when you open your chart at 2 a.m. in the morning, you know that there is going to be an engulfing candle here. Even when you see it like this, you know that before it closes, it has to go down and then closes in engulfing. So I urge some of you guys to learn candlestick formation and turn it into a strategy. So that's why you see that I catch spikes a lot. Why? Because I know candlestick formation. It's very, very, very crucial. If you want to be very good at catching spikes, know candlestick formation. Know your tweezer tops, know your tweezer bottoms, know your evening stars, know your morning stars, know your engulfing candles, know your piercing candles. Know basically all types of candlestick formation as much as you can. Because as soon as you open the chart, you basically know that this candlestick is forming, this formation is forming. Okay, it's pretty much a deep topic, and that's for mentorship, of course. How are you say, can we use price action in synthetic and how? Okay, yes, we can use price action in synthetic indices. What is price action? The definition of price action is candlestick formation. Generally, even if you go anywhere, that's the definition you're gonna get. Price action is candlestick formation. So definitely we can use price action on trading synthetic indices. Price action includes supports, resistance, supply zones, demand zones. Support points are there on synthetic indices. Resistance points are there on synthetic indices. Supply points are there. Candle price action also you can find different chart patterns such as flags, pennants, wages, and everything. Basically, that's price action. Don't try to get in deep knowing what price action is. That is price action. How do I catch spikes? I think I answered this one. Show us with example how to break analysis from higher time frame to lower time frame. Okay, let me show you how I break my analysis from a higher time frame to a smaller time frame. So I'm going to be sharing my current screen, which is on V75 here. Right. Let me share my analysis, which is on V75. Okay, this one we were doing what? I think what were we doing here? We were practicing something. Okay, so this is what I do. I like opening my charts from a higher time frame to a smaller time frame. So let me delete everything here. I was analyzing this. It's refusing to remove there. So this is V10. Right. What do I see on my V10? I see that my V10 has been going up. Right. Like this. It has been going up. And when it was going up, what was it doing? It was leaving me with these lows. Lows and highs. Right. Another low here. Another high here. Another low here. right? Another high here. It's breaking previous highs. This is how I analyze my charts on a daily basis. And then another low here, a high here, a low here. So this high is the same as that high, so I treat them the same. Sorry, a high here. I'll explain why I do this. A low here. This low is valid. Why? Because it didn't come to break this low. So now we have another new high here and a low here. If you watch on my YouTube channel, this is exactly what I teach. And we have another low here and another high. And this low didn't break this previous low, meaning that we are still going up in an uptrend. So we have another low here. And we have another high here, right? So far, what my trade is telling me is I'm in an uptrend, right? Why am I saying I'm in an uptrend? Because I'm breaking what we call previous highs. I broke this high, I broke this high again here, I broke this high again here, I broke this high again here, I made a new high, I broke this high again with here, and I'm breaking this high again with here. So what happens is when we go up, we have what you call a high, a low, a high, a low, a high, a low. And as long as I don't break the previous low, this means I'm in an uptrend. As you can see from me, this is a high, this is a high, this is a high. And we haven't broken the previous low. But the moment that we come and we break this low, that means that we have changed our direction and we are now going in a downtrend, right? So remember, I'm seeing this from a higher time frame, which is my H4, right? So far on my H4, I'm in an uptrend. So I switch from my H4, right? I switch from my H4, then I go to my H1, right? Now, my H1 makes noise more than my H4 makes noise. But as you can see on my H1, we had a point whereby we had highs, lows here. Let me change color, or let me just draw it. Sorry about that. Let me do this. We had a point whereby we had, this is H1, a high, a low, a high, a low, a high, a low, a high, a low, a high. In H1, this was an uptrend, but we came and we broke that low here. So that means we had switched from an uptrend to a downtrend. So we left a low, a high, and we came back again, a low, a high, a low, and we came again and we broke this high. Now we have switched to an uptrend, a low, a high. This is the valid high. This is what we call a complex pullback, whereby we are not breaking any low or breaking any high, but we are playing within that range. So we played in that range and then we made another new high, a low, a high, a low, a high. We came, we broke the previous low, meaning that we are now trending in a downtrend. So now we have another new low and possibly a new high because we haven't broken this high. So what you expect to see is a new low, a new high, a new low. I hope you really understand that. I really hope you understand that. So now I know that overall in H4 we are in an uptrend, but in H1 we are in a downtrend. So I have to play it carefully. Why? Because the larger time frame always rules. So I then switch to my smaller time frame, M30 or M15, but I prefer M15 so that I find entries. Okay. So in M15, you can see that I had a low, a high, a low, a high, a low, a high, and then broke, switched to a downtrend, now switched to an uptrend. Now possibly I'm switching to another downtrend. Why? Because I came here. Now some of this stuff needs mentorship now. Because I came here and I filled the gap here. If you watch my YouTube channels, there is a gap that's here and we fill it 50% and then we fall. And as you can see, we just filled that gap. Now we are falling. So generally for V10, this is a sell and I would give people a sell signal with my stop loss being where? Being here. It's the highest point here. Why? Because if it comes and breaks this point here, then that means it has broken the previous high and is continuing with the upward direction. But as of now, we have filled the gap and we expect it to fall. So that's how I break down my analysis on a larger time frame. I hope I answered you well there. Okay. I think I've also briefed you on breakout structure as well. Which time frames do you use to check your structure? I start checking my structure from H4, going down to H1, M15. For trading a reversal, do you enter after the engulfing candle or during its formation? Okay, can I answer this question? Now, this is what happens. We have what you call aggressive entries and non-aggressive entries. So let me share my whiteboard here. So as I'm saying, we have what you call aggressive entries and we have what you call non-aggressive entries, which are safe entries. Now, say I've been having a series of green candles. Let me try to demonstrate it like this. I've been having a series of green candles, right? And then I find a candlestick like this. This is a bullish candle. And then soon after that, I see a red candlestick starting to form, right? We can use what you call an aggressive entry, whereby I know that I've been buying, but sellers are starting to appear. So what do? I draw a box of from the first green candlestick like this, right? And I put what you call a, what do I put that? And I put what you call a, sorry about that. Let me do this. And I put what you call a sell stop here, right? Why do I put a sell stop? So that now I know that it's supposed to be an engulfing candlestick, right? So the reason for me putting my sell stop there is as soon as my candle comes, since it's an engulfing, I know that there's no means it's going to go up again. So as soon as it hits this point, it's breaking structure in a lower time frame. So let's say this is M15. In M1, I would be expecting to see something like this, and to be breaking structure somewhere here, right? So that would be my engulf. That would be the visualization of my engulfing in M1, but in M15 it would be appearing like this, right? So as soon as it is that point, my order is triggered, and then I put my stop loss either 50% of my engulfing candlestick. So now that's what you call an aggressive entry. And then a safe entry is when I have to wait for that engulfing to close. Soon after it closes, I take an entry. And then I put my stop loss even at the half of that engulfing, and then it goes. So this technique of using the aggressive entry is mostly used by scalpers, whereby we pump lots, and then as soon as it closes, we exit, we enter safely, then we continue, right? So let's say it's not an engulfing. Let's say it's an evening star. It's going up, right? It's going up. Then I see a candle like this, right? And then tail, right? Sorry about that. I'm expecting to see a red candlestick showing up, right? A tail, a body like this, right? So now I'm anticipating that the next candlestick that comes out must close like this, right? So just because I see the possibility of an evening star forming here, I come and I mark that box, right? And I put my order here, right? I put my order here so that when this candlestick comes like this and it hits the box before the candlestick closes, my order is triggered. And even if it opens, since it's going to break, right, then my order is triggered. And if I want a safe entry, I'll just have to wait for it to close, then enter here at the opening of another candlestick. And then it goes in my direction. I hope I answered you there. You asked about the engulfing, but I ended up giving you a little bit more. What is the best time frame to analyze and trade these markets? I start from H4 and I end up in M15. Sometimes when I go to H1, sometimes when I go to M1, I'll just be looking for more precise entries based on what I know. Can we have permission to record? Yes, I'm recording this session. I'm going to be posting it on my YouTube channel. Sorry, if you want to, sorry about that. I'm not supposed to say this now, but if you want to get the links to the group, you WhatsApp me on this number, 712 +26712707911. This is where you WhatsApp me. This is where you find my, what do you call this? This is where I respond. This is where you find my services and everything. So you can write that down and you can continue answering more questions. How do I know the exact time to enter? I think I answered. Show us with an example. How, okay, that's what I was answering actually. Right. Then there's someone who's asking me, how does candlestick formation tally with boom and crash on 1 minute time frame? So the thing that most guys do is we mark our support, we mark our resistance on bigger time frames. Say this is H1, and what I expect is a movement like this, right? This is an example, right? So for me to get a more precise entry, I know that when I see an engulfing here, that thing is reversing. When I see a piercing, that thing is reversing. When I see an evening star, that thing is reversing. So I switch on to a smaller time frame, right? Basically, that's it. Why? Because on a larger time frame, I found the candlestick formation that I want. So I now start switching to smaller time frames. And that's when I start looking, okay, it has been ticking all the way up. It has been ticking, but now it crashed. And then it tries to go up, it doesn't break this high, and then it crashes. This happens in 1 minute time frame. Then this verifies its breakout structure in 1 minute. Now I know that it's not going down. It's never going to come up. Why? Because I was able to notice a very crucial candlestick formation on a larger time frame, and I was able to work with it until I got to a smaller time frame. Because breakout structure happens in all time frames. Can we use the system on other indices other than booming crash? Yes, definitely 100%. You can use it. Thank you. Is it a good idea not to use a stop loss, but instead opening an opposition in opposing? Thank you. Is it a good idea not to use a stop loss, but to instead open an opposing? Okay. The trades to hedge, especially during the market manipulation. I don't hedge. I've never traded hedging. So I always use a stop loss these days. When I see that my trade is about to hit my stop loss, sometimes I shift it in good faith and move it so that my trades gets more room to breathe. Because sometimes I've discovered that when you put your stop loss, sometimes it hits it and then it falls or it goes up. Okay, so is it that the time you close the trade? I don't understand this one. So why do accounts blow? Is it because of no SL set? Accounts blow because of different reasons. Sometimes people don't set stop losses, sometimes they use larger lot sizes, sometimes they enter when there's a reversal and then they get hit. That analysis breakdown was so helpful and amazing. Thank you very much. So how do those support and resistance to get spikes as well? So do you use those support and resistance to get spikes as well? Yes, I do. Once in a while I do. Thank you, sir. Please, boss, can you explain? Can you use the chat for explanation? Okay. I think I used it. Would you confirm a sale on V10? Yeah, I confirm a sale of V10. Do we draw support and resistance on candle close or weekend? We draw it on candle close. We use the body. We use the body.